Hello dear students, welcome to Devika's Commerce and Management Academy. Internal construction chapter from corporate accounting we have seen the introduction part, we have learned the journal entries, and also we have done one problem. So how to write the journal entries? Are you perfect now? Now today we are going to work out one problem with the journal entries and also balance sheet. The important part is here, balance sheet we are not going to prepare in T form like liabilities one side, assets one side. No, we are going to prepare balance sheet in vertical form, just like company final accounts. In company final accounts, I taught you pro forma of balance sheet. In vertical, first we'll be focusing on liabilities, right? Then after that assets. So different formats. And wherever we need to focus a little bit of working notes, then that will be shown in the note number. So that company final accounts balance sheet format we are going to follow. Very easy, need not to worry. We know it, we have done already, right? So journal entries also we know. What's the problem? So let's enter into the problem. The problem is given here on the desktop. You can note down or take a screenshot. This problem is taken from Pankaj Publications, problem number 1. So let me explain this problem first, then after that we'll work out. Now what is given to us? Vikrant Company Limited has the following balance sheet as on 31st December 2005. What's there in the balance sheet? Normal balance sheet. Asset side, if you see goodwill, building, machinery, stock, debtors, cash and P&L account. And liability side, share capital, preference share capital, 4,000 preference share capital, each one 100 rupees each. 6,000 equity share capital, 100 rupees each, and creditors. Simple balance sheet. Now coming to the adjustments. Based on adjustments only we are going to work out the problem. Balance sheet is normal. Now what are the adjustments? Considering the financial position, a capital reduction scheme is decided as follows. So company has decided according to the position they wanted to reduce the capital. How do they want to reduce? We have 4 points. First point, equity and preference shares are to be reduced to 50 rupees each. Both they wanted to reduce it to 50 rupees each. Then the amount to be used to write off goodwill and P&L account. So first of all we'll start from point number 1. Equity capital and preference capital, both they wanted to reduce it to 50 rupees each. So for this we'll pass the journal entry. What is the journal entry? For equity share capital, journal entry is here, you know it. So what is that? Equity share capital account, date is not given, so I'm writing number 1. So equity share capital account, equity share capital account, debtor to equity share capital account, share capital account to capital reduction account. So this is the entry. Actual equity capital, what is the value of equity capital? 6,000 equity shares, 100 rupees each. The value is here 6 lakh. So we'll write here 6 lakh. Original value is 6 lakh. What do they want to do? Equity share and preference share, both they want to reduce it to 50 rupees each. Earlier it was 100 rupees. 6,000 shares into 100 rupees, 6 lakh. Now we wanted to make it 50 rupees. Means 6,000 shares into 50 rupees. Isn't it? 50 rupees means it comes to 3 lakh. 3 lakh. Here what comes? The difference between the original value and reduced value. 6 lakh minus 3 lakh. It comes to 3 lakh. This is the first entry. Did you remember? Whenever you wanted to reduce either capital like equity share capital, preference share capital, debentures or even creditors, the entry comes same type of entry. This is equity share capital. Equity share capital data to equity share capital to capital reduction account. Right? So we have passed. Narration, everything I told you in the previous classes only. So this is over. Next one. Preference shares also want to reduce it to 50 rupees. Same type of entry will pass once again. Instead of equity share capital, we'll say preference share capital, right? So preference share capital account debtor to preference share capital account to capital reduction account. Very easy to pass the journal entries, right? Now preference shares are here, 4,000 preference shares at the rate of 100. Total value is 4 lakh. 4 lakh will write here. Total value as per the textbook 4 lakh. What do they want to do? They want to decrease it to 50 rupees each. So 4,000 preference shares into 50 rupees, it comes to 2 lakh. Okay. So now capital reduction is how much? 4 lakh minus 2 lakh. It comes to 2 lakh. So this is also over. Now third point, second point onwards, the amount is to be used to write off goodwill and P&L account. Now second point onwards, everything is to be write off. How do we write off? With the capital reduction amount only. So third entry always we have to pass with capital reduction account debtor capital reduction account debtor. So to whatever we wanted to reduce it from the asset side, most of the time from the asset side whatever we want to reduce, everything comes on the credit side. So this capital reduction account amount is how much? Total of these two, capital reduction 3 lakh and again capital reduction 2 lakh. Together it comes to 3 lakh plus 2 lakh, 5 lakh. 5 lakh will write here. This 5 lakh is utilized to reduce. What to reduce? The amount is to be used. This amount is to be used to write off goodwill. First of all, we'll write goodwill. Goodwill is how much? 2 lakh. To goodwill 2 lakh. And what else? Point by point will go. Goodwill and P&L account. P&L account always we have to. P&L account is how much? 2,40,000. To P&L account. P&L account is 2,40,000. Then after that, buildings have to be reduced to 30,000. Buildings, to buildings. How much? 30,000. Buildings account. 30,000 and machinery 20,000. To machinery account 20,000. Then after that, the balance, last point, be careful. The balance is to be used to create reserve for bad debts, pass entries to implement the scheme and prepare balance sheet. Now fourth point is, once again you read, the balance is to be used to create reserve for bad debts. The balance whatever is there, that is to be used for reserve for bad debts. Reserve for bad debts. Generally balance is their capital reserve we used to transfer, right? Balancing figure. No capital reserve. This, the balance, the difference between 5 lakh and all these amounts, difference, we want to transfer it to the reserve for bad debts. So how much is the difference? You see, this is 5 lakh and this is 2 lakh, 4 lakh 40, 4 lakh 40 plus 50, 4 lakh 90,000. Means difference is here 10,000. 10,000 difference we'll see. We'll write here. This is the balancing figure. In earlier problems, capital reserve, balancing figure was capital reserve. Now in the problem they said, that is the reason we are saying reserve for bad debts. Entries, 3 entries are over. In the previous problem we have prepared capital reduction account. Now here balance sheet we have to prepare. Balance sheet, as I told you, not in T table. We have to prepare in vertical format. So format I already wrote it. A balance sheet of Vikram company as on 31st December 2005. Particulars, note number and amount in vertical. So first of all, we'll see what we'll write it on the top. Liabilities first. Then after that, assets will write. In liabilities, we'll write one heading, that is equity and liability. Heading, equity and liabilities. What are the equities and liabilities here? First of all, we'll focus on the liabilities side. Equity and liabilities, here you can take shares. How many shares are there? One is preference shares and also equity shares. Okay, that you can write here, shares or share capital you can say. We can write preference shares, equity shares separately, or otherwise we can show it in note number 1. Note number 1. Notes accompanying to the balance sheet. You can write accompanying to balance sheet. Notes accompanying to balance sheet. This is the heading we can give. Note number 1. Note number 1, what will do? Share capital. Both the share capital. One is preference share capital and another one is equity share capital. First we'll take equity share capital. Equity share capital. Here 3 lakh we have already deducted. Now leftover is here 3 lakh. 3 lakh only we'll take. So how much it is there? Share capital is 3 lakh. Equity share capital 3 lakh. In the same way, preference share capital. Preference share capital also, out of 4 lakh, 2 lakh we have deducted. Now left over for us here 2 lakh only. After deduction, whatever is there, that we are taking. This is preference share capital. Total it is 5 lakh. Point number 1, as per that it is 5 lakh. So 5 lakh it is. Then after that, what else is this? Share capital, both we have written. Next, creditors. Creditors, we did not touch anything. It is as it is. Creditors, we can say it as a current liabilities. Under the heading of current liabilities, we don't say creditors. Trade payable. Debtors, trade receivable. Creditors, trade payable. Say along with me, it will be easy for you. So we'll say it as a current liabilities, trade payable. How much is the creditors amount? It is 2 lakh. There is nothing is there on the liability side. We found only the shares and creditors that we have written. Now it comes to total 7 lakh. Liability side is 7 lakh. Now coming to the asset side. Asset side, what do we do first? Non-current assets. Assets, give a heading of assets. You can say non-current assets. Under this, we can say fixed assets first. Fixed assets. From the balance sheet, we can take fixed assets. You can write separately or we can show it in the working notes. So note number 2 will take fixed assets. Second one is fixed assets. How many assets are there? Fixed assets are here. Building. Building is reduced by 30,000. Reduced by 30,000 means 2,20,000 minus 30,000. It comes to 1,90,000. So building is actually given building 2,20,000. 2,20,000 minus already we have reduced to 30,000. It comes to 2,20,000 minus 30, 1,90,000. So I'll write here 1,90,000 only. Assets, fixed assets. And there is machinery also. Machinery also. So we have reduced 20,000. Machinery value is 1,80,000. 1,80,000 minus 20,000. It comes to 1,60,000. Machinery 1 lakh 80 minus this 20, 1 lakh 60,000. So this comes to 3 lakh 50,000. This is 3 lakh 50,000 fixed assets. Okay, next what else is there? Goodwill already we have written off. Whatever we have written, that will not touch it in the balance sheet. Goodwill is over. Building machinery we have written. Stock is there. Stock you can say it as inventory. Don't say it directly stock. Inventory. Inventory is how much? 1 lakh 60,000. Stock is over. Next, now debtors comes to trade receivable. Trade payable is nothing but creditors. Now debtors is trade receivable. There is an adjustment reserve for bad debts is there, right? So this we can show it in the working notes. Note number 3. So note number 3 is here, trade receivable. Here debtors are 1,80,000 minus reserve for bad debts, RBD. How much it is? 10,000. Always we have to deduct that 10,000. So you are getting 1,70,000. This amount will write here 1,70,000. Company final accounts also adjustments we never used to do in the vertical balance sheet. Note number 1, 2 like this will be showing related working notes. Okay. So this trade receivable is over. Next, what else is there? Cash. Cash we will say it as a cash and cash equivalents. Cash in hand, cash in bank, everything comes under the cash and cash equivalents. Cash and cash equivalents. How much it is? 20,000. This is 1,70,000 written. Okay. Now, if you have anything else to write over everything, need to be very careful balance sheet. What is related to this journal entries? According to that, we'll be posting. Now, if you see this total, yeah, this is also 7 lakh. It's tallying. Tallying means balance sheet is correct. So let me explain you. Let me take another marker. It's here. You have to underline very carefully all these things. One is equity and liabilities. Under this column, share capital we have written. And the next one is current liabilities. Underline it. Next, assets. Under assets, non-current assets. And rest of the amounts are inventory and all these things. Okay. Now let me explain the entire problem. It's very easy and very clear. If you understand this problem, further problems will be easy. Be careful. Only journal entries, you know that how to write. First entry is always reduction of the equity shares and preference shares. One is equity shares and preference shares. When we are reducing the capital, whether it is equity or preference, the entry will be, if equity means equity share capital letter to equity share capital to capital reduction. Okay. So as per that entry, first total amount is we have written, and how much they wanted to reduce, they wanted to make it to half. Half means 3 lakh. Rest of the difference 6 lakh minus 3 lakh, that 3 lakh is we are transferring to the capital reduction account. In the same fashion, equity share capital also. Equity share capital also they want to reduce it to 50 rupees each, means half they wanted to make. Entry is same, equity share capital to equity share capital to capital reduction. So total equity share capital as per the book 4 lakh it is given. They want to reduce it to 50 rupees each, means half. Half means 2 lakh it comes. 2 lakh. And the difference is 4 lakh minus 2 lakh is 2 lakh. Now third entry is always this capital reduction amount we want to utilize to write off some assets. Okay, so this capital reduction will be on the debit side. Capital reduction account at R2. What you wanted to reduce it? See the problem. Adjustments 2, 3, 4. All the adjustments related to this only. They said goodwill profit they wanted to write off. Okay, we have written. And building and machinery they wanted to reduce it to 30,000 and 20,000. Okay, and the last point they said the difference. The difference is to be transferred to the provision for bad debts, that we have transferred reserve for bad debts. Okay, so 5 lakh minus all these four amounts, it comes to 10,000. Clear? Then after that what we have done, we have prepared the balance sheet in T form. Always remember, first we'll be focusing on the liabilities. Liabilities, first thing we'll say equity and liabilities heading. Under that, preference shares and equity shares. These shares will write. Then if any long-term loan like debentures are there, we could have given a heading of long-term loan. Long-term loan, under that column we would have written that what is that, debentures. Okay, now that was not there. No, directly we went to the current liabilities. Current liabilities we found only the creditors. Creditors we never say it as a creditors, we say it as a trade payable. Okay, now here share capital we have shown in the working notes. Remember that share capital, whatever is left, this one we are taking. This we don't, because we have reduced to 3 lakh. We have reduced to 3 lakh and we have reduced to 2 lakh. These two amounts we have taken here. We never touch the original amount because we have reduced. After reducing, how much is left? This is left. Equity share capital 3 lakh, preference share capital 2 lakh. This we have written and this amount is here. Now creditors, there is no adjustment. Simply you can say it as a current liabilities, trade payable. We don't say creditors, trade payable, return. Only two amounts are there. So liabilities total is 7 lakh. Now coming to asset side, non-current assets heading will give. So under that fixed assets it comes to 3 lakh 50. How do you got this 3 lakh 50? Fixed assets we have shown here. Fixed assets we have only two, building and machinery. So building value and machinery value, these two we have deducted from building. So these two we have deducted. Okay, after deduction building value is this much. It was earlier 2 lakh 20 minus 30. It comes to 1 lakh 90. 2 lakh 20 minus 30. 1 lakh 90. In the same way, machinery, it was 1 lakh 80. Given 1 lakh 80. Reduction 20. So it comes to 1 lakh 60. This total we have written here. Inventory we will write as it is. Stock means inventory. We don't say stock. Inventory. And trade receivable. Trade receivable means this is debtors. This one is creditors. Trade payable, creditors. And debtors we say it as a trade receivable. So there is an adjustment, that is the reason we have written note number 3 here. Debtors minus reserve for bad debts, RBD. So that we have deducted. The amount is 1,70,000 we have written. And cash is also given. Cash and cash equivalents will say. If cash at bank was given, cash and cash at bank both we would have written on the note number 4. Cash in hand, so and so amount. Cash at bank, so and so amount. Total, we'll say cash and cash equivalents. Right now we have only cash, but still we keep the heading of cash and cash equivalents, 20,000. This total is also 7 lakh. Over. Problem is over. Clear this problem? Try to work out this problem without looking at the board, and also take out some more problems. First take the screenshot. This chapter is quite easy. Only journal entries you have to learn. This is, balance sheet. So according to journal entries, a little bit changes we do, alterations, that's all. Rest of the problem is normal. Feeling easy? Take out your textbook. Try some other problems also. You feel very easy and comfortable. Practice. Okay. See you in the next class with another problem. It will be easy for you. So by the way, don't forget to share these videos. check out the playlist. Many subjects already covered for you all, right? So practice it well. Before exam, just revise. Good luck.